Hello, everyone. My name is Angie, and I welcome you to Olymp Trade. Today, I'd like to talk to you about the main events on the economic calendar and what to look for trading opportunities. As always, please enjoy our weekly promo code that adds plus 30% to any and all deposits that are made throughout this week. The promo code is FEB and then the number 12. It's also going to be in the description of this video. I also want to mention that next week we are starting a new event called the Profit Challenge and Quest. 8 analysts from 6 different countries are going to compete to see who gets titled best. And you, our dear traders, are going to participate in a quest so that you can get all kind of different and awesome prizes. You can go ahead and click on this little icon in the corner to see the intro video. And of course, my friends, make sure you are signed up to our YouTube channel and make sure you ring that bell so you don't miss out on any notifications and live streams. And of course, so you don't miss the start of the new event. Ready? Let's go. So this past Monday, the markets were subdued as there were holidays in the United States and Canada. Japan released the worst decline in GDP since 2014. Annualized GDP for the fourth quarter was released at negative 6.3%, below negative 3.7% forecast, and 0.5% previous fact for the third quarter, which was revised down from 1.8%. We are seeing a similar picture following the consumption tax hike in 2014. Now, the Bank of Japan has stated that they will consider more monetary policy easing to support the economy. On Thursday evening at 11:30 p.m. GMT, we'll take a look at Japanese inflation, and an hour later, we can have a look at services PMI. Now let's go ahead and look at some targets. USD JPY has been trading in a range between 109 and 110, or 109,500 and 110 for the past week and a half or so. The pair has met resistance, 5-year resistance dating back to June 2015. We are likely to see a move down, and support will be around 109, but do pay close attention. And if we have a breakout of 110 of this resistance, we may see the pair rise all the way to 111. Now, the SCI, which is the China Security Index, which includes 500 companies listed in China, Hong Kong, and Taiwan, rose by 19.5% as of today from 2 weeks ago and recovered all losses following the coronavirus outbreak. Now, we are still seeing, we're still waiting to see the full impact of the coronavirus on the Japanese economy, amongst others as well. Now, risks pertaining to the virus remain, and the markets will continue monitoring the situation. But the week started on a slightly positive note. Investors are pricing in that the coronavirus effects will be short-lived, and the markets are calmed by the fact that the coronavirus is, for the most part, contained within China. The number of the infected is decreasing, and there is information that the Chinese are coming quite close to having a vaccine. Beijing has promised to increase stimulus by reducing corporate taxes to help support the economy and soothe the impact of the coronavirus. On the other hand, on Tuesday, company giant Apple has sent a warning that they will not be able to meet their revenue quota in March. And car maker Hyundai, for example, also had to shut down plants in Korea because of insufficient car parts coming from China. And therefore, we will continue to track the coronavirus because the full impact on the global economy and different regions is not yet clear. Gold, as a result, and the Japanese are trading slightly higher. Gold support remains around 1555 per troy ounce, and resistance will be around 1600. We do have a pretty busy week on the economic calendar. We have several releases from the United Kingdom. On Tuesday, we saw that there were only 5.5 thousand claimants for unemployment in Great Britain in January, which is well below the forecasted 22,000, 22 and a half 1,000. So on Wednesday, we'll take a look at 9:30 a.m. GMT. We'll have United Kingdom inflation for January. Prices are forecasted to rise by 1.6%. On Thursday, the 20th, at the same time, 9:30 a.m. GMT, we have British retail sales for January. We are expecting increase of 0.7%. And on Friday, also at the same time, we have manufacturing and services PMI. Now, the sterling is also influenced by Brexit negotiations that are set to really start next month. So far, the European Union and the United Kingdom clearly don't see eye to eye. So, hard negotiations will likely pressure the pound. Let's go ahead and look at some targets. GBP USD on a daily time frame is trading above key support, which is around 1.29500. The pair has potential to the upside with a target around 1.32. To the downside, we'll pay attention to the 200 EMA, which is around 1.28500. Now let's go ahead and talk about the Eurozone. The euro is also under pressure. The economy has been struggling for some time and is likely to feel the pain of the coronavirus. On Tuesday, we had the release of German ZEW economic sentiment for February, which came in at a staggering 8.7, well below the 21.5 forecast and 26.7 previous fact. On Friday, we have the release of German manufacturing PMI for February at 8:30 a.m. GMT and Eurozone annualized inflation for January at 10 a.m. Now let's go ahead and take a look at Euro US dollar. On a daily time frame, I want you to pay attention that the currency pair is oversold. We can see that on the RSI, and either upbeat data from the eurozone or weakness in the US dollar would bring the pair to resistance around 109. Support is going to be around 1.0777 or 1.07775, and this is going to be if we come down to this support, this is going to close the gap which was made in 2017. I also want to pay your attention that the dollar index is currently overbought. We see the same picture on the RSI. And the dollar index may be due for a correction with support around 98.70. Resistance will be around 99.40, followed by 99.67. Now, let's talk about, since we're talking about the US dollar, let's talk about the United States. We do have also several releases. The main focus will be on real estate with building permits and housing starts on Wednesday at 1:30 p.m. GMT. And we have existing home sales on Friday at 3 p.m. Also pay attention to initial jobless claims and Philadelphia Fed Manufacturing Index, which is on Thursday at 1:30 p.m. We do have United States PMIs, which are scheduled for release on Friday at 2:45 p.m. Right here. Now, I do want to pay your attention that we have the release on Wednesday. We do have several releases, but we have a release of the FOMC meeting minutes, excuse me. So for the monetary policy, we'll look for clues as far as the coronavirus and any impacts, and further clues as to what we can look forward to from the central bank. Now, and also please pay attention that several FOMC members are speaking on Wednesday as well as on Friday. Now, I also want to pay your attention to Canada and Australia. On Thursday, pay attention to Australian employment for January, scheduled to release at 12:30 a.m. On Wednesday, we have Canada's inflation month-on-month for January at 1:30 p.m. and core retail sales on Friday. And also for the targets, I do want to mention that USD CAD failed to break above resistance and remain above long-standing resistance dating back to 2016 and actually even further to 2001. The next target down for the pair will be around 1.32 and slightly lower, which is our 38 and 2 Fibonacci. And to the upsides, resistance will be around 133. Now, for the Australian dollar and United States dollar on a daily time frame, resistance is going to be around 1.67500, and support from 2009 will be around 0.66 and then 0.65. My friends, thank you so much for tuning in. Don't forget to use the promo code in the description. Don't forget to subscribe. And don't forget about the challenge. Show me your support by giving me a thumbs up, and I will see you guys next time. Thanks so much.